Dirty dealings, corporate battles, consumer woes. This is Evening 5. The Securities Commission and Bursa Malaysia said they are closely monitoring the recent market conditions amid the heightened volatility in certain stocks. The regulator and the stock exchange operator said the recent significant decline in the share prices is limited to a few small-cap stocks and not widespread, according to a joint statement issued on Friday. The affected stocks constituted around 0.17% of the total market capitalization and 8.3% of total traded value for the year, adding that the stock market fundamentals remain intact. The SCM Bursa Malaysia also assured investors that the Malaysian stock market fundamentals remain strong and there should not be any cause for concern. Nonetheless, investors are advised to make informed investment decisions and continue to refer to disclosures and announcements, as well as unusual market activity queries and responses on the local boss platform. They also stressed that they will not hesitate to take the regulatory actions where irregularities are detected. In the last 2 weeks, at least 13 companies saw shares plunge and either hit limit downs, drew queries from the boss regulator, or triggered the freezing of their intra-day short selling. These companies have lost a total of over 7 billion in market capitalization since the start of the year up until January 18th. Bursa Malaysia managed to snap 3 consecutive days of losses to end at its intraday high on Friday on bargain hunting in selected heavyweights. The FBM KLCI ended the week 7.19 points up to 1,486.37. Putrajaya will increase household assistance to 1,200 ringgit this year from 600 last year, as well as extend the scheme to include the poor category in addition to the hardcore poor under the Sumbangan Asas Rahmah program. Meanwhile, assistance to single individuals will remain at 600 according to a Ministry of Finance statement. The items eligible for purchase under the scheme will be expanded to include 3 new categories: personal care items, medicines and school supplies, in addition to basic food and foodstuff. According to the ministry, the revised program is expected to benefit over 700,000 recipients in the poor and hardcore poor categories with an allocation of 700 million ringgit. This marks an increase of over 5 times from the previous year, as the program reportedly benefited 210,000 individuals with an expenditure of 130 million in 2023. Beginning January 22nd, the Sara will be credited to the eligible recipients in Peninsular Malaysia to purchase selected essential items by using MyCard at participating retailers. The credit assistance will be disbursed throughout the year at 100 ringgit for households and senior citizens without a spouse and 50 ringgit for single individuals. According to the MOF, following the encouraging response to the Sara program last year, the government also expanded the network of participating retailers such as supermarkets and sundry shops to 515 from 424 previously. Meanwhile, the aid will be given to eligible recipients in East Malaysia from February 19 onwards through bank transfers or cash handouts. UEM Group, a wholly owned subsidiary of Khazanah Nasional, will collaborate with Itramas Corp and Hexa Renewables on the first phase of the national flagship 1 gigawatt hybrid solar photovoltaic energy transition project, the development of a 500 megawatt hybrid solar plant in Johor. UEM's Green Industry Unit, UEM-Lestra, has inked a shareholder agreement with Hexa Renewables Malaysia to form Lestra-Hexa JV, 51% controlled by UEM-Lestra and 49% owned by Hexa Renewables. Concurrently, Lestra-Hexa has inked a technical partnership agreement with Itramas, which will see Itramas providing technical services in developing a complete engineering, procurement, construction and commissioning package for the JV. According to UEM, Itramas is Malaysia's largest vertically integrated solar plant developer, EPCC and service provider, while solar and wind project developer Hexa Renewables is a portfolio company of US-based infrastructure investors I2 Capital. Besides formalizing the partnerships, UEM Managing Director Datuk Muhammad Izani Ghani said the trio has also secured suitable land in Segamat, Johor, where the solar plant will be located. He added that the group would be working with the government on the details of the third-party access process framework that will enable this project to go live. The 1 gigawatt hybrid solar PV plant was announced under the government's National Energy Transition Roadmap, launched back in July last year, which will be integrated with a renewable energy industry park. LB Aluminium is acquiring 2 factories and an office on a 4.56-acre freehold parcel of land in Baranang, Selangor for 30.42 million cash. In a filing, the group said it has entered into a sale and purchase agreement with Putrajaya Realty for the proposed land acquisition. According to the group, it is buying the property, which is situated next to its manufacturing operations and factories, to grow its warehouse capacity in Baranang, relocate its operations and cater for any future expansion plans. LB Aluminium said the purchase will be financed either through internally generated funds, bank borrowings, or a combination of both, depending on the group's cash reserves and future funding requirements. The acquisition will increase its net gearing level to 0.39 from 0.31 and is expected to be completed by the first quarter of 2024. Grab Malaysia highlighted that it has observed a good number of its active delivery partners benefiting from the new earnings structure over the past few days, it said in a statement on Friday. Grab pointed out that under the new structure, delivery partners have benefited from the peak hour incentives and received fairer compensation for the time spent and distance travelled to complete their jobs. It said that it ensures a steady stream of earning opportunities for its delivery partners from its platform and that they are fairly compensated for every booking they complete. Grab stressed that the new earning structure is part of its commitment to foster economic growth for all Malaysians. This came after riders were urged to boycott Grab over the company's revamped delivery fee and bonus framework. Under the new framework, base fares have been reduced while incentives for peak hour deliveries, distant pickups and extended wait times to pick up deliveries have been increased. Grab added it will continue to keep investing in promotions like Grab Unlimited, hot deals, combo jimat, particularly during peak demand periods to boost demand and ensure that its delivery partners can consistently earn. It also said that it would continue to engage with its delivery partners to help them understand and gather feedback on its new earning structure.